About the tech trade. It has been the runaway winner of the first 6 months of 23. Let's ask Dan Ives. He joins us here on set at Post 9. It's good to see you.
Great to be here.
So you had a note today, 12 to 15% more for tech. That's what you see in the second half?
I mean, we believe this is the start of a new bull market for tech. And I think ultimately it's going to be broader. It's not just that, call it 7 or 8 big tech stocks. We believe fundamentals are not just stabilizing, but actually starting to see for the first time upticks across cloud, across enterprise. And then, of course, you have this AI gold rush, which I view as a fourth industrial revolution.
Would you be willing to admit that the gains we've seen from the beginning of the year to now were multiple expansion? It wasn't based on fundamentals, right?
I think the first half is multiple expansion.
Okay.
I think the second half is starting with earnings over the next month is going to be fundamentals. I think this is really where a lot of these companies, they ripped the Band-Aid off, and we're seeing really across the board, especially over the last 4 to 6 weeks, a much more dramatically different IT spending environment than we saw going back to February, March, even April.
So when you say rip the Band-Aid off, you're talking about these companies that were really, I guess, at the forefront of becoming leaner and in some cases meaner, and they went through these rounds of layoffs first, and they're emerging on the other side first. Is that what you're alluding to?
Yeah, I mean, 6 to 10% cuts. I think in some cases even more. And now you're actually starting to see, you're going to see those margins, I think, creep higher and higher as we go in the second half. And when you look at software, you look at chips in terms of what's happening with inventory, I can tell you, traveling the globe the last month, what we've seen right now across enterprise is something that I think this is going to put more fuel in the rally across the board as we go into this July and 2Q earnings season.
I mean, even those who are bullish on tech look at the way that multiples have expanded, and it makes them a little queasy. I want to show you where the forward PEs have gone for these stocks, okay? Apple, the stock you love more than any other, from 20 to 30 times forward from the beginning of the year until now, okay? Microsoft from 23 to 33, Alphabet 17 to 23, Nvidia 34 to 56, Amazon 46 to 89. Those all make sense to you?
In my opinion,
I didn't even get to Tesla, by the way, which we're going to do later on in the program.
Sure. I think this is a 1995 moment, not 1999 bubble. I believe this is, in terms of a revolution, and we're seeing similar in terms of the internet, this is something that's really going to transform tech. And I think in terms of those multiples, in terms of I think what's not really being factored in, this is potentially $1 trillion of incremental IT spend that basically was not here 6 months ago. And that's why what you're seeing in Redmond with Nadella, obviously what we've seen with Jensen and Nvidia, I think that's just the first start now of these second, third, fourth derivative plays with this AI gold rush playing out.
Can it be both? I mean, can it be 95 and still a bubble in this stage? It doesn't have to be the be-all, end-all bubble like we saw in 2000, but what if we agree, okay, this is 95, not 99. This is the, early to nascent feeling stages of this AI gold rush, as you put it. But these stocks have run a lot in an environment that's highly uncertain.
Yeah.
Why is it justified?
Well, in my opinion, because really what you're seeing, first of all, these are fundamental in terms of these companies. They have fortresses in terms of balance sheets. So you're looking at just a much healthier enterprise environment from a balance sheet perspective. And I think really, it started off narrow, but this is something that's going to transform tech. I think from a software perspective, from a chip perspective, you look at numbers, I believe the street as we go into 2024 could potentially be underestimating growth by 10, 15, 20%. And I think that's really where the rubber meets the road in terms of as this all starts to play out. And that's why I think the guidance heard around the world, the Nvidia $4 billion raise.
Sure, but not every company on this list is Nvidia with the kind of guidance that they gave. Are you expecting similar type guidance from other names on this list?
I believe this quarter, for the first time, what you're going to hear from Redmond, what you'll see from Google, I think what we start to see, you're going to now start to see the signs of what ultimately is going to be just a massive expansion of growth that's coming in. That's why I believe multiple expansion was the story first 6 months. Second 6 months is not just talking the talk, it's walking the walk.
Yeah, but doesn't a potential recession or even further economic slowdown hurt potential enterprise spend on some of these things that are enabling these AI-related stocks to, soar?
No doubt.
NVIDIA's not giving away its chips for free.
no doubt. But I do believe what started to happen is it's this different IT spending environment that we've seen the last 4 to 6 weeks than really for the first 4 months of the year. And I think that's all going to start to play through. And I still think many investors are expecting whether the next shoe to drop, numbers are going to come down. But ultimately, I think in terms of tech, that Band-Aid was ripped off. These numbers start to come up. And I can tell you a lot of my institutional investor conversations, many still on the sidelines. And I believe after this earnings season, it's really going to cause what I view as really a tidal wave of growth coming through.